Hello, Gapper Scott here, and this is the Gap Wrap for Monday, January 11th. Before I get started, don't forget about the two free webinars we have tomorrow. One at 12 p.m. we have the Tuesday Treat with Tom Busby from DTITrader.com. Delighted to have him speak. I've never heard him speak, and even though he gets around, as they say, he's been trading for a long time very successfully, runs a great business, and be sure to check it out. 12 p.m. sign up here to register. Also, late afternoon, I'll be doing my How to Profit from MasterTheGap.com. Basically, it's a pretty marketing-oriented a presentation. Unlike some other ones where I really focus on free research, this one is designed for those of you who've expressed some interest, curious about what goes on behind the scenes with Master the Gap. You can see exactly what we do each day and what's shared with members, and see if it's a kind of service you're looking for to help you be a better gap trader. So check that out. Again, click on it to register. It is free, and all you need is a name and email address. Okay, so today we had pretty good sized gaps up for once. To start off the week, I did trade today's gaps, so let me focus on the futures gap guides. We've gotten rid of a lot of the descriptive commentary that was up here. You can learn more about these guides and the assumptions built in to them right here at explanatory notes. Okay, so for today's setup, we were opening above Friday's highs. That made it a UH zone in the ES, 73% historical win rate, profit factor well over 2. That means historically it's generated more than twice as much in profits as it has in losses when using a stop equal to this amount here, minimum 5 points in the ES, or 30% of the 5-day average true range, whichever is larger. When looking, that was based upon current market conditions. We've been in a strong bullish environment. Based upon patterns, closing patterns, again a very good setup, 67% win rate, profit factor 1.7, more than 70% in historical profits. Seasonality was the concern today. This day of the week being Monday and part of the month, heading into the middle of the month, is riskier for fading up gaps historically, and that's evidenced by these weak numbers there. So 2 out of 3 looked very good. YM, similar numbers, not quite as good. Certainly very good based upon market condition. Patterns were sort of neutral, seasonality weak. NASDAQ very good for market condition, weak on patterns. There was actually a pattern risk for fading up gaps today in the NASDAQ indices, both the NQ and the Qs. And seasonality was weak. And then for the Russell was just sort of neutral for market condition and patterns. So nothing overly impressive there. Real quickly, let me just show you what the ETFs look like. Some people listen to my webinars and don't realize that we also handle the ETFs. So in the UH zone for today, very comparable numbers. You always love to see this because they're two different instruments, two different time frames that were used to create the data, and they even use slightly different closing times of the day. We use 1600 Eastern Time for the SPDR and 1615 for the futures. Patterns, not bad but not great, a little bit on the weak side. Seasonality again weak. See, the YM looked a little bit better for both market condition and patterns. Qs, again, good on market conditions, weak on patterns and seasonality. And Russell looked neutral to slightly positive based upon market condition and patterns. Seasonality a little bit weak. So let me show you my pre-market comments that I posted right at 9:20 a.m. this morning Eastern Time, about 10 minutes before the open. So the NASDAQ indices were weak because of that pattern risk. So you had 2 out of the 3 for the NASDAQ that made the NASDAQ a little bit riskier. And seasonality, as I pointed out, was a little riskier. There was some opening risk. We ended up opening above R1 pivot level. That is a risk factor in terms of an opening level. And I was a little bit concerned about opening at a new high for the year, for this year and for the prior 12 months, so could add a little bit of volatility with some short covering. But market conditions were good and patterns were pretty good. And as I mentioned in this weekend's video, Friday was the 6th consecutive day to make a consecutive higher daily high. So, and that's small sample size, but 14 of 20 times using our standard stop, it would have been a winner, and it was profitable. So here's what I posted. I was going to fade today's setups, reducing size because it was not a risk-free kind of trade by any means. It never is, but this one certainly had some warts on it. Used a 5-point stop, targeting gap fill area with 2/3 of position, held a third for extended target. Let me show you why I did that. In fact, and I said possibly a little more, and I noted the daily pivot. So let me show you, which was down about 3 points below the close. But let me show you specifically what I was looking at that you may have missed. So see how the win rate for gap fill was 73% today? Well, 59% probability of hitting extended target. So the way I determine if I want to go for the extended target or not is I take this number 59, divide by 73, and it came out to 81%. Over here, based upon patterns, I took 57 divided by 67, and that tells you 85% of those that had filled historically, based upon these patterns that were in play, had gone on to hit the extended target. Okay, and we still had good profitable profit factors. So even the seasonality one was 43 divided by 48. That's about 90%. So when I see probabilities consistently at 80% or beyond for the setup, I'm going to hold at least a third of my position for the extended target. And I came very close to trading this half and half, meaning holding half for the gap fill and half for extended target. But that's what I was looking at, and that's what I did. Let me show you how it turned out. Got the Russell, the ES, the NASDAQ, and the YM. And since I did trade the ES, let me just focus on that. I've got the price guide indicator turned on, so you can see a couple things that should stand out. See, we had confluence up here just under 1150, and above where we opened, which is the white dotted line here, 1146 and a quarter. I was filled precisely with the market order at 1146 and a quarter. So my stop was a 5-point stop, was up here at 1151 up above. So I had confluence working for me, and just really strong numbers for the most part. Seasonality is the one condition that I pay the least attention to. I give it less weighting than market conditions and patterns. So we opened here, and it started selling off pretty much immediately, which would have been difficult to follow if you were trying to trade it after the open. But I was in from the get-go, pretty much entered precisely at the open and got pretty much the high of the day. Sold off, filled the gap rapidly, got out 2/3 at placed my stop at 1142, so I got 4 1/4 points, 4.25. It's a little over $200 per contract. I'm about 2/3 of my position. Held the other half for 1139. I explained all of this in the trading room in great detail, even before I had set up my trades, what my plan was. Just missed 1139 on this bounce. I thought I was going to be in trouble, but I tightened my stop at that point down to, because it came within 1 point, tightened it down to, I'm trying to remember where now. I think it was 1143.75. 1143.75. So it didn't really get all that close. Came up and then rolled over and filled me on the last part around 11:30 this morning. So I got 7 1/4 points on the last third. 4 and, is that correct? 4 1/4 on the first 2/3 for an average somewhere over 5 points. However the math turns out. So a really nice trade all the way around. Great decision making. Not to pat myself on the back too much, but this was a good trade. So let's see, looking at tomorrow on the daily charts, let's see if anything stands out. Another higher high, so this is the 7th consecutive higher high, higher high, higher high. You got a doji here, false down day, a little bit of weakness here in these markets. I'll tell you what, let me real quickly run the probabilities on 7 consecutive higher highs, since I ran 6 consecutive higher highs over the weekend. Be right back. Alright, those numbers are run. And let me show you the TradeStation Strategy Performance Report. So as you'd expect, it hasn't happened nearly as much as 6 consecutive higher highs. It's happened only 23 times. 13 of those were gaps down the next day, so it's about a 50-50 split. 61% win rate using our standard stop here, which is 30% of the 5-day ATR, minimum 5 points in the ES. Profit factor on the weak side, 0.73. That's a money-losing situation. So if we get a gap down tomorrow, that's going to be a little riskier. I'll defer to the gap guides because the sample size is small, okay? And this is a really bullish market right now. But on the short side, if we gap up, this could be a really good setup. Sample size is small again, and I'll defer to the gap guides, but you know, that'd be an attractive setup. So there you go. That is 7 consecutive higher highs, and hopefully that'll help you out tomorrow. And that is the gap wrap for Monday, January 11th.